Good afternoon, traders. This is a live trade recap. I took 3 trades this morning right at the market open. The first 2 trades stopped me out. The third trade hit my 2-hour profit target. So that means that I am break even for the day on my day trades. And I just want to show you a quick example of how that works with all or nothing 2-hour trading. That is the risk management that I use in my trading strategy. So R stands for risk. So when I get stopped out of a trade, like today, the first trade stopped me out, I ended up losing 1 time my risk. My second trade stopped me out, I lost 1 times my risk. You can put in any number there. If you're risking, let's say $10 per trade, now you're down $20 after those first 2 trades stopped you out. Third trade hit my profit target, now I'm up 2 times my risk. So again, if we were risking $10 per trade, I'd be up $20 after that. Or that third trade makes me $20, so minus $20 plus $20, you're at 0. So that's how you end up at break even after losing 2 trades and winning 1 trade, which is always better than a red day. So I'll take that anytime. And at the very end of the video, I'm going to show you on my spreadsheet how I know that the third trade has a much higher probability of working out than the first and second. In fact, it's almost 2 times more likely to work out than the first trade. And I'll show you that at the end of the video, so make sure you stick around for that. And then the other thing you might notice here on my account page is that the total account value is down quite a bit. It says that I'm down $37 on the daily P&L. That's because my swing trade with SPXL ended today. You can see that I no longer have a position. And we made money off of that trade. I'm going to make a separate video about that. It's just that the S&P 500 pulled back hard today and stopped me out. But again, I made almost 1.5 times my risk, which I don't really follow the 2R risk thing on that, but I'll go over that in a separate video. Let's just stay on the day trading, and I'll show you with the day trades how today I'm still green on the day, even though I lost the first 2 trades, which all we're really trying to do is get break even when we lose the first 2 trades and we win the third one. So CYTK, basically 0. We're up 16 cents, but we're not trading full position size. But anyway, even if we were, it should be around 0. That's the whole point of the 2R trading system. So let's get to the screener. I'm going to show you how I pick the stocks every day. So go to my screeners and mid-ish cap stocks. Always click these 3 dots, click on modify. I actually forgot to do that at one point this morning, and I'll show you the results of that. These are my filters. Once I have that up, then I click on volume so that I'm looking at from the maximum volume to the least volume of the day. At 9:30, I want to see 1 million shares or more. Otherwise, I won't even look at it. And then I'm just looking for stocks that are moving up, so the green stocks. This morning, everything was red except for one. CYTK was the only green stock, and it was moving up quite a bit. So let's take a look at the video now, and we'll look at what was on my chart page here. So here's CYTK. You can see I have the daily chart selected. The main criteria for me to keep a stock on this chart page to look for possible entries is that it must be trading above the 200 MA, and it is. So here's the 200 MA, that's the red line, and you can see it's gapped way up today. So that meets that criteria. SGOC was not supposed to be on my chart page. That was because I didn't hit those 3 dots on the screener. So you'll see me remove that or replace it with CYTK in just a moment. Now, the next thing I do is I mark out the previous day or previous session high. So whether it be yesterday, in this case it's Friday, or the aftermarket or pre-market, whichever is higher, I mark that out with this yellow line, and then the price must get above that level to indicate strength so that I can look for a trade. So getting above that level signals me to look for an entry. This is SPXL, that's the swing trade. So here I am just, again, following my plan, moving my stop to the 50 MA. This video is all about the day trade, but I just wanted to show you because no matter whether I'm swing trading or day trading or investing, I have a plan going into every trade and I stick to it. And that's the only thing you can do as a trader if you want to be successful. So let's move on and see where the entry is. Okay, so here's where the signal is to look for an entry. It's when the price breaks above that yellow line. It happens right about 9:35. And then now I'm just waiting for a 1-minute candle to make a new high after this pullback. So we need to break out above the previous high. Then I need to see a pullback. So it doesn't always happen on the next candle. Sometimes it just continues higher for a few candles and then pulls back. And then that's when I look for my entry. So this pulled back on the next candle. And now I'm looking for the high of this candle to be broken. So the high of this candle is 29.59. Watch this price bubble. Happens very fast. I want to see 29.60 or better. Then I trigger my hotkeys to buy 1 share. And I have my fingers on my hotkeys, which I use Control Z. And there you see it. And you saw the flash. Let me go back and watch that in real time one more time because it happens so fast. Okay, here it comes. Here's that next candle, and we're looking for 29.60. Watch this price bubble. And then you'll look up here, there, and you see me trigger my hotkeys almost instantaneously. We caught 11 cent slippage. That's not a big deal on a stock this price, and it's not surprising at all because you can see how quickly the price is moving here. There's a lot of volume coming in on this candle. A lot of other people were planning to take that same entry that I did, so it's not surprising. And then the first thing I always do once I'm in the stock, once I'm in the trade, is I move my stop loss up to the low of the previous candle. And that protects me just in case you see how quickly this thing is moving. It could have just as easily ended up in a flush, and I might have been stuck in that flush and had to take a huge loss because I didn't get my stop in place. So that's the first thing I do. And then I pull up my 2-hour calculator, which you can download from the Facebook trading group by the same name, Trading Armor. And I plug in my entry and my stop loss, and that spits out my 2-hour profit target, which was 31.81. And then I also calculated what would my profit target be if I would have gotten my ideal entry. That's what I'm doing right there. It's 31.48. So I just put a line on the chart because it's always good to know if you get stopped out, would your ideal entry profit target have been hit? It's just good data to collect. I would say so far in this test trading, 9 times out of 10, roughly, it doesn't get hit if... So, or let me rephrase that. If my ideal entry target gets hit, my actual profit target with that slippage also gets hit most of the time. So, because there should be some room, you know, the 2R thing, 2 times your risk. If you watch most of my videos, you'll see that level get hit, and then oftentimes the price continues a little bit higher before it reverses back down. So that's all I'm talking about there. And now you can see that it's going against me, even though it was looking good for a little while there. But I don't worry about it. I just stick to the plan. If it hits my stop, it hits my stop, and then I look for the next entry. So let's get this thing fast forwarding. If you get in the habit of selling out early when you see this kind of choppy stuff, then you're just going to end up red in the long run. At least that's what happened to me after doing that for so many months. Even though my win rate was much higher, I was winning a lot more trades, but I was always red in the long run. All right, so there I got stopped out. Now I'm looking for the next trade, which will be the next time a 1-minute candle makes a new high. And I can do that. Let me back up a little bit because you can see here is point A of the ABCD pattern. As long as the price hasn't come down below that level, and as long as I haven't been stopped out of 3 trades, I can keep taking entries as a 1-minute candle makes a new high. So let's fast forward here. Okay, it happens right here on this candle, and it happens quickly again. So you can see on the, let's see, where am I hovering over this candle? Right here. Whoops, just missed it. The high of this candle is 29.14, so I want to see 29.15 or better. So it's going to happen pretty quickly as soon as the, let me fast forward just a little bit, as soon as the next candle starts to form. Okay, we got a few more seconds here. Here's the next candle, and then boom, it pops up, and you can see I triggered my hotkeys immediately. And again, got a little bit of slippage, but you don't worry about that kind of thing. When you get in on those pops, that's showing you there's a lot of buying interest in the stock, so it's very strong. And you should be able to cover that slippage if the trade works out. As always, I move my stop loss up to the low of the previous candle. At this point, this is the right thing to do, because if you look at, let's back it up a little bit, my criteria for where I place my stop is always the low of the previous candle, unless the candle that I entered on has a lower low or I entered during a consolidation. So at this point, this doesn't look like a consolidation. You can see this downtrend here and then a reversal, and things are trending back up, right? So that's why I use the low of the previous candle. If it is a consolidation, then I can use the low of the consolidation area. And you'll see that take place in just a minute, because I get stopped out of this trade. So that's trade number 2. The next trade happens very quickly. Let me fast forward. Okay, here it is. So that candle, it's actually the same candle that stopped me out, triggered me to get it back in because it breaks over the high of the previous candle. And now, because you could see now it doesn't look so, the direction doesn't look so upward, it looks more sideways here because of all this choppiness. So now I can say, okay, this looks more like a consolidation area. Let me place my stop at the low of the consolidation area, which is this 2860, and that's what I do. 2859, I believe, is where I place it. So actually, you can see I was kind of debating with myself there. And yeah, eventually I said, okay, not eventually, I mean a few seconds later, I said, no, I need to place that. This looks like a sideways consolidation. I need to place it at the low of the consolidation area. That's what I did, 2859. And then my profit target goes in at 3114. So let me fast forward a little bit. All right, so now I'm just going to let it play out because this trade happens pretty quickly. But again, imagine yourself in this trade. You know, you just lost 2 trades and you're seeing this thing pop up like crazy over your position. Whether you have 1 share or your full position size, are you going to be able to hold to your 2-hour profit target? Are you going to start scaling out, leaving money, not only leaving money on the table, but basically making it so you cannot end up break even on the day? So even though this was a strong pop and now it's getting sold off, I just hold strong because that's my plan. That's what my plan says to do. It doesn't tell me to worry about, okay, sellers are stepping up and pushing the price down. Now here comes the buyers again. Oh, it's so close to my profit target. Do I pull it down or do I just let it hit my 2-hour profit target? Well, my plan doesn't allow me to pull it down. I have to hold until my 2-hour profit target. It doesn't matter that there's a red candle forming. There we go, and the profit target gets hit. And that's it. So I got my 2-hour trade, cancels out the other 1-hour losses, and that's it. We're done with the day as far as day trading goes. And let's take a look at that spreadsheet now. Like I promised, I already entered in all these trades. So here's those 3 trades. CYTK, the first and second losers, and the third one was a winner. And you know, we even scraped a few pennies off the table there. This test trading is not about making money. It's just about collecting data. That's why I'm just trading with 1 share. And then the win rate today was 33%. So that's a break-even win rate when you're trading all or nothing 2R. Anything above that is profitable. And the average of all our win rates on every single trade day so far is 51.32%. We've taken now 45 total trades. That includes error trades. So all these trades that are like boxed in red or blue are either error trades or trades that no longer fit my plan criteria. So this includes all of those, and that's 40% win rate, which is plenty to be profitable with the all or nothing 2R trading system. If I remove those error trades, the win rate is 46%, and the average of both of those numbers is 43%. So 46% is like perfect trading just according to the plan, and then this would be, you know, with some human error in place. Now, the win rate after 3 trades, which is a significant figure because you can see here on trades 4, 5, and 6, they all were failing, so I just decided early on to only take 3 trades, and that moves the win rate up to 45%. Now, this is what I was alluding to in the beginning of the video when I showed you this, and I said that the third trade is almost twice as likely to work out than the first trade. Look at this. The win rate of my first trade is 36.8%, win rate of the second trade, 46%, and the win rate of the third trade, 62.5%. So those are pretty important. I guess about 72% would be twice the first trade, but still that's a big, big difference. And you can see it just kind of increases on each trade. So that's why I don't just take 1 trade every day. If I just took 1 trade every day, I would be just barely break even or just above break even. And the reason why I'm not is because I'm taking that second and third trade. And then I've updated the data from the video from this weekend, if you watch that, about my results. So you can see here, we'd still be up 9R. And if I'm only taking 3 trades, up 14R, 14 times our risk. So again, if I was risking $10 in every trade, I'd be up $140. Or if I was risking $100 every trade, I'd be up $1,400 right now after all these trades since June 17th. So about a month of day trading. So anyway, hopefully this video was helpful to you. If it was, hit the like button. If you haven't, please subscribe. And if you have any questions about these trades or this day trading plan or the spreadsheet, let me know in the comment section below and I'll get back to you. As always, go into every single trade with a plan, stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.